Welcome to the latest Motley Fool Scoreboard. I'm on in Chalk Blue. We've got longtime fools Dan Caplinger and Tyler Crowe giving a 1 to 10 rating to leading mechanical and industrial construction company EMCOR, ticker symbol EME. Tyler, Dan, you're going to have to get me interested very quickly. Otherwise, even I'm clicking somewhere else. Let's start with the business. We'll rate the strength of it based on industry competition. A 10 is invincible. A 1 is hopeless. Both of you have strong 8s here. Tyler, you lead it off.
Yeah, look, if building the part of an AI data center that makes up 55% of construction costs, or at the intersection of AI, manufacturing nearshoring, America's like manufacturing renaissance, building sustainability, and the electrification of everything doesn't actually excite you, like, I don't know what does, dude. Like, we'll have to find something else. All right. Well, EMCOR is the nation's second largest electrical and mechanical contractor behind Quanta Services. Winning contractor bids is a very competitive business. It's construction. It's a cyclical industry, but it's a necessity that's likely not going to get disrupted anytime soon. You can't, just stop doing physical labor to do these sort of things. It also benefits from winning bids and having ongoing service contracts on those bids. So, it's not just like we do the job and then we have to move on. There's some ongoing maintenance and service contracts built into that stuff. So there's some slightly less cyclical components as it builds out that kind of like, base of service contracts. And also, construction companies, they don't need a lot of capital to sustain the business. So you can get pretty high returns when times are good.
Yeah, and I'd say most people outside the Fool universe probably never heard of EMCOR, but it's one of those companies that services are integral, must-have parts on key projects. Demand exposed to cyclicality very slightly, but EMCOR's done a really good job pivoting around changing macroeconomic conditions and finding business.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Tyler's got a 9, Dan's got an 8. We'll go with Dan.
I like it when you have an in-house employee climbing the corporate ladder, eventually making it to the top. Tony Guzzi's CEO. He's done well. His holdings about nearly $100 million worth of EMCOR stock and doing a really good job leading the business forward.
I mean, let's just say I'm glad I'm not rating this iteration of the company and not its corporate predecessor, JWP. Which was part of why we have Sarbanes-Oxley. It doesn't take a rocket science to run this business. You win competitive bids, you keep your costs in checks because they're typically fixed price contracts, and don't do anything dumb with capital. Do that, you're pretty good. And Dan said, Tony Guzzi, his team have done a great job over the past 20 years that he's run this business. Returns on capital for the business are spectacular, and the board returns lots of excess cash to its shareholders. I mean, that's kind of what you want, right?
For financials, a 10 is a fortress, a 1 is yikes. Both of you are 9s. We'll start with Tyler.
Look, it's a cyclical business. You can't deny that, but it has a large cash position and no debt. The vast majority of its liabilities on the books are actually remaining performance obligations, which is basically we've received revenue for a job we haven't done yet, so we can't book the revenue. It's a liability. That's on the scale of worst to best things on the liability side of the balance sheet. That's probably what, top 2, top 3?
Yeah, I had a lot of trouble figuring out anything to find that wasn't good about EMCOR as far as financial statements were concerned. No leverage. Love to see that. Solid revenue growth, a good pipeline of future business. Only reason it wouldn't get a ton from me, I think that there is some extent to which government incentives have funded some of the projects that its services go into. And I'm not sure that the pace of those government incentives is going to continue where it has been looking into the future. That's why I dinged it a point, gave it a 9.
I hope folks stuck around because these are really strong scores. And when the worst thing is you get the cash early. Okay. That's awesome. That's what you want. Let's talk valuation. Let's see if the stock price keeps up. How well will it do over the next 5 years, Dan? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
I gave them a 10 to 15% total return. Folks that watch me on Scoreboard know that's a above average score for me. Generally, my default go-to 5 to 10%. I just think that the push to expand the universe of stocks that are exposed to AI, other cutting edge technology, I think it's going to support this stock as well because, like I said up front, most people don't know what EMCOR does. Even if they knew what it was, they wouldn't necessarily tie it to AI. I gave him a safety score of 6, a little bit higher than Tyler did, but only because I think that the backlog is going to extend through that 3 to 5 year period that we're looking forward. After that, I have some of the same concerns with respect to how well it's going to continue to be able to pivot to meet changing demand, changing types of projects going forward.
So I gave it 15 plus for 5 years, but a safety score of 4. I think that EMCOR touches a lot of the major economic trends happening in the United States today. That like I mentioned, it's not just AI. It's like every other part of the manufacturing, electrification things that are going on in the United States today. It's led to spectacular growth in recent years. And I think that the 2 to 3 year outlook on this for like we said, the remaining performance obligations, that backlog that it has, it looks really strong for like the 2 or 3 year period. Beyond that, it starts to get murky. Like we don't have as much visibility in it. And the construction industry, it's cyclical, and when it turns really fast. And so I'm just kind of giving that safety score 4 to be conservative, knowing that the out years could turn pretty quick.
Move on to everyone's favorite topic. Dan, is there a company in EMCOR space you like more?
It's really not. It's not entirely a niche space, but the universe of electrical and mechanical contracting services companies isn't that huge at this level of size. And so, yeah, EMCOR is really it as far as I'm concerned.
I have to mention Quanta simply because they're the number one in the space, and both of them are going to kind of like battle to roll up regional mom and pops and everything like that over the years. But I should mention that of the two, I own EMCOR. So it's hard to say I like one more. Maybe like a basket approach would be really good with considering like the trends we're talking about here. Thanks
to both Dan and to Tyler. They've given EMCOR an overall score of 7.9 out of 10, just short of that 8.0 that would force me to own Shays due to the safety score. When I see super high scores all around, but a safety score that's pretty low, that tells me, hey, this is really interesting for a watch list, but you need to really understand what's going on, that could cause it to potentially fall. For example, the cyclical industry. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a company behind some of the ETFs you probably own. Till then, Fool on.
CO2 tank. SodaStream wants $20 for a container that is like the size of this.
The level of spite for SodaStream, like built into this whole thing, is awesome.
Spite is like the primary motivator for me a lot of the time, I'll tell you.